Hey, folks. Good morning. Good morning to all friends and family. Um, Ugly day in the markets yesterday. Um, the market did not like $100 a barrel oil. Market didn't like Tesla's earnings. Market didn't like Google's earnings. Spread that out all over the place. We've got a resurgence in tariff threats and yields continue to grind higher, and so it was a bad day all around. This morning, the market has tried to rebound slightly, futures, but they're already giving up any steam. Nasdaq is already down just a touch. S&P and Dow, getting closer to flat for the day. So we may end today in the red. It may just be the summer and just general weakness, lack of breath. We've run far, hard, and maybe we need to give up a little bit of steam before we get into um, the heart of earnings season next week, along with Kevin Warsh and if he says anything meaningful. I think most people are expecting no move at all next week from the Fed. I think the more surprising thing will be that we won't get any guidance or any sort of commentary that is helpful from the likes of Kevin Warsh. And we had some earnings overnight. Intel after the bell yesterday. Crushed expectations. Stock was up big in the aftermarket, and the reason I say that today may be lackluster is because it's given up all of that already. I think it's up only a couple of percentage points, 3 or 4 points in the pre-market this morning. Intel, the other reporter of note. Excuse me. This morning was American Express. Did very well. K-shaped economy, higher spenders hold American Express cards, and they had revenue missing by a slight amount, but it beat on the profit line. Um, Albertsons, the grocery store stock got whacked yesterday, off greater than 20%. I mean, you don't get a grocery chain being off 20%. Really, I think, huge evidence of the K shaped economy. I mean, just softer demand, cautious consumers. If folks at the lower end of the K are not able to feed themselves the way they normally are, we've spoken about the broken nature of our economy in terms of the Main Street economy. And, if American Express is crushing it and Albertsons is getting crushed, it is, to me at least, a clear sign that the thesis that we've had spinning about on the show is real.
Yeah. Hey, David, that's some of that is due to the EBT restrictions that the Trump administration has put in, uh, like on high margin items like soda, chips, cookies, candy, that stuff. It's not in every state, but multiple states have turned it back that you can only buy it on nutritious food, and it's pretty controversial. But that's something that is it's not only restricting what how many who gets EBT now, but also like what you can buy with it. So that's definitely going to affect a lot of companies. Like I would think a lot of the beverage companies are seeing the same thing.
Thank you for that, Paul. That is very important input. Um, I I don't know. Oh, if Justin can jump back up on stage, happy to talk a little bit more about Tesla. We left the show yesterday. Tesla was down mid single digits, maybe a little bit more. Through the day, it fell 15%. Um, one of the commentary around the call wasn't, even though the call happened the previous evening, wasn't particularly supportive of the stock. And I just there was just more and more pain happening yesterday. I mean, it was a really tough day in the markets overall. Nasdaq, it was down more than 2% at a certain point, two and a third. It finished the day down 1.5%, and so the laggards really lagged yesterday. Relating to the Elon Musk world, it was revealed by Google that Google owns a $94 billion stake in SpaceX. That is quite heavy, 550 million shares, about 4% of the total shares outstanding. And that also weighed on Google throughout the day with respect to that disclosure. Sticking in the automobile sector, Volkswagen, which I've spoken about a number of times on the show about its difficulties, um, their shares are down pre-market after cutting full-year sales and car delivery forecasts. There is just massive upheaval in Europe, as we've talked about, in Germany, as we've talked about, in the automobile sector, as we've talked about. I mean, this is really a confluence of a bunch of pretty bad storms coming together for Volkswagen. German interest rates are at highs that haven't been seen in forever. It really is just a bad storm. At the same time, when Volkswagen became what it is in the early part of the 20th century, and then kept pushing from there. We now have Chinese vehicles that are just destroying everybody at every turn. So Volkswagen um, being one of the largest automobile manufacturers in the world. Um, if not the largest, certainly is just at the heart of this storm. Eric, good morning. Go ahead.
Good morning. I just want to put into context the Google ownership of SpaceX. Essentially, I think it was 2015, like 10 or 12 years ago, they had a round of financing, and Google gave $1 billion to SpaceX to own about 7 or 8% of the company. I think the valuation back then was somewhere between 10 to 15 billion. Let the AI give me 12 billion. Okay. And at that time, so it was a huge chunk of the company. It got diluted with subsequent investor rounds and whatnot. But that's big. That's really big. But they got it for so cheap. I mean, $1 billion. Yeah, that for them, no matter what happens to the company, they will be very well on side. It's a really good investment for them, regardless. Yeah. Back to you.
Thank you. The other earnings that I wanted to highlight was Lockheed Martin. The stock gained around 10%. Defense is clearly a winner in this administration. Which of the defense companies you want to own, or a basket of them that you want to own. I mean, this is certainly not going to stop throughout this administration. It seems that our president, although he touts the fact, and this is not pejorative, although he touts the fact that he has, solved or ended a bunch of wars, we are fighting a lot, and he wants a lot of spending on defense, not only out of this country, but out of all of NATO members. Whether you agree with the policy or not is irrelevant, right? The policy is what it is, and it's going to continue for the next couple of years. And so, the defense sector is going to benefit from it, and also other companies that are not necessarily defense oriented, but are going to get into defense because the money is so good there, are similarly going to benefit. Oracle today announced the contract with the Pentagon. Stock is up because of that. I wouldn't say buy Oracle because of that, and Dave Nikoski is not here to tell me that would be the most idiotic thing. But I will tell you, That defense is certainly going to continue to roll along the same way, by the way. We will continue to roll along with tariffs. We may, Liberation Day may be far away. The Supreme Court decision relating thereto may have gone ahead and knocked it down. But Trump clearly believes that tariffs are a good thing. And one way or another, he's going to impose them. They might not be as large as he would want, they may not be as big of a bargaining chip as he would like, but he's going to make sure that they're there. And that was part and parcel of yesterday's announcement. I mean, the administration at this point is grasping at straws in the law to impose tariffs. So if it doesn't show you that Donald Trump, come hell or high water, is going to make sure that there is some form of tariffs, I can't otherwise convince you. I mean, they had to stretch to the fact that the judiciary in this country, does not seem to be enforcing a law that we have on the books that says no, we cannot trade with countries that either have forced labor or trade with other countries that have forced labor. Apparently, I think it's pretty evident that this is pretty lax when it comes to the goods we buy in this country. We buy goods in this country from everywhere, inclusive of places that we know have forced labor. Trump wants to impose his tariffs. He's going to use any possible, either loophole or in this case, really a law that's been ignored to get that through. On that point, Carlo, anything to add on that? If not anything to add on that, anything to add on clarity, sir? Good morning.
Well, good morning. Clarity still seems to be in a holding pattern over this ethics debate. Some senators from the Dem side have expressed an interest in trying to provide their own ethics write-up, which again confirms that I don't think this bill is dead. I just think that this bill needs some revision. Um, Senator Warren obviously yesterday put out a unhinged video in which she claimed that the Clarity Act needs to be dead on arrival because it's just so dangerous for consumers and investors, and the ethics provisions that are included in it are not sufficient. And it's kind of ironic that she believes that it's not enough because it doesn't do anything to what he's already gained, meaning Trump has already gained from crypto. But by the same token, we're talking about passing legislation that limits sitting Congress members from profiting off of insider trading, but that also does nothing for the massive wealth that they've accumulated on their prior trades. So, as usual, you have to consider the source when it comes to Elizabeth Warren. Um, I still remain hopeful, although the window is rapidly closing, that I think a compromise will be reached because there are just too many important sector players who are voicing their support for clarity. And frankly, thing we did not talk about yesterday that needs to be at least considered as well is that we still have the crypto lobby, which has come out pretty vocally and said that they will remember the names of the Democrats who vote against the Clarity Act when it comes to the midterms. And we know that that is a very powerful lobby that can sway votes. They have money, they have deep pockets to throw at elections. So we'll see how this all plays out. I don't have much to say on the tariff front. I think it's going to continue to be a legal battle in the courts as to how much Trump can use the tariffs as an economic weapon and how long he can continue to sustain a tariff attack outside the scope of the executive branch's power without congressional intervention. But as with most things, Trump, it really doesn't matter what the legislature can or can't do. He's going to do it until a court chimes in and definitively says he can't. And I don't expect that policy to change with respect to tariffs. I think he'll continue to push the boundaries because that's what this executive office does. It's a very different, unorthodox presidency in that it really pushes the limits. And I don't think I've ever recalled a presidential term that has had more cases go to the Supreme Court than this one. You're a lawyer too. Correct me if I'm wrong on that, but I just think that most everything ends up in the Supreme Court when it comes to Trump policy. But we'll see. Back to you, David.
Yeah, thank you for that. I totally agree. Yes, a lawyer too. And I do want to highlight this is for litigators in this country, especially DC focused litigators or DC located litigators. This presidential administration has been a feeding fest. It's been incredible. And again, judgment aside, policy aside, the fact is what the fact is that this administration has sent more people to courts in this country, I think, than any other administration because it is so active, because it is so, I don't know, radical, let's call it, in terms of policy decisions and the way it does things and executive orders and sometimes not following accepted historical procedure, and lawyers have feasted. I think that the effect of AI on the legal profession has not been felt as much as it would because of the volume of legal activity that has been made up or ginned up by this administration. Once this administration is done, I think that there will be a period of starvation, or a lot of slimming down, for law firms, because of the decrease in the work. By the way, on the same note, this is a strange pivot, but I'll do it anyway because I got to weave this story in. Leslie Pool Supplies is eyeing bankruptcy. Now, what's the tie-in? The tie-in is Leslie's Pool Supplies, which is a public company, um, loaded up on debt in and around and right after COVID because the entire world needed a pool, and pool supplies were in high demand, and Leslie's did unbelievable. Well, that that gouging is now over, or gorging, I should say, is now over. COVID is over. Interest rates are high. People have borrowed maximally on their homes to build the pools, and so we've hit peak pool. And that just same way we hit peak, what are those, fire pits, right? Peak fire pits. If you're in the fire pit business, I'm sorry for you. You had a phenomenal run during COVID, or hammocks, anything else that's very generally outside and out home, same thing. So Leslie
No more
Pools.
fun, everybody. Stop having fun.
Exactly.
Knock
That's
it off.
right. Back to the office, everybody. So, so the same way, that this administration is a one-time bump, um, for litigation. COVID was a one-time bump for pools. And listen, if I was a business owner, would I have clarity of mind to say, this demand that is off the charts right now is going to go away, and I really can't borrow an awesome amount of money in order to fund my capex for a short period of time, after which, my sales are going to come down hard, my capex is going to be done, and I'm going to be left with a massive debt load that I may not be able to refinance at lower rates. Well, that's where Leslie's Pool Supplies is right now. It'll certainly, restructure. I'm sure the debt load is just overdone, needs a lightening up, but otherwise the company will continue to function. It's clearly a good company, but in any event, similar type of circumstances. Don't get carried away by the one-time bump. All right. Brandon, I know, has a lot on his plate today, so I'm just going to go ahead and give the microphone away for a Friday rant by our favorite ranter, Brandon. Please, Brandon.
Good morning. Yeah, I'll take that title. I there are a lot of things, so I'm just going to jump straight into it. But I do hope everyone's having a great day.
I can't wait. I can't wait. I can't wait.
No, there's no big rants today. I promise. No big going off. I think the biggest story that I want to cover is the one that I pinned at the top here, and I think pretty amazing if you look at it. It's a letter sent by NVIDIA, and multiple other partners, including Microsoft, Palantir, CrowdStrike, Perplexity, just Andreessen Horowitz, A16Z, Meta, many people that are talking about how we shouldn't put restrictions on open source, open weight models. And I'm not going to read the whole thing. It's pinned up there for you all to read. But this is such a great piece that I'm going to read just a small little paragraph here. It says, our AI leadership, meaning the United States, will be judged not by one frontier AI model, but by whether the United States builds a strong, open ecosystem that diffuses into every sector. This is essential for creating opportunities for innovation and prosperity across the country. It requires expanding access to AI, encouraging competition, robust application layers, and giving Americans greater control over the technology they rely on. Open weight models, AI models that anyone can download, inspect, modify, and run on their own infrastructure are an important part of the foundation of that foundation because they make advanced AI more accessible, adaptable, and widely available. Now, a few things I'm going to point out here. You'll notice there are two major names that are not listed on this as partners in this letter: Anthropic and OpenAI. And it's pretty wild because those are the two frontier models. But again, as we've talked about on this show, too many times to count now, um, those two are struggling. And I don't want to say they're struggling. They're struggling to hold on to control. And that is this whole regulatory capture, this whole, AI's escape containment, like it's, aliens or something, and it's all we're all freaking out, and they're creating these stories, they're creating these narratives, and they've been controlling the narrative up until now. But now we're getting almost every powerhouse in the country to say, hold on, slow down here, we need these open weight models. And those open weight models they're a direct threat to the bottom line of the two frontier models that have been leading the way. Just is what it is, and Michael Kratzios from the OSTP, Besson, et cetera, other people in the White House have come out and, they're trying to ban Kimmy or set these restrictions or sanctions and all this other stuff. But then Howard Lutnick comes out against it. We're seeing, I think, the first real battle of this administration versus Silicon Valley, and we haven't really seen that yet, because this administration has really, or I should say, Silicon Valley has really entrenched themselves with this administration. Starting even before this administration got into office with supporting Trump because he was going to be the pro-business president. He was going to lead the way on AI and et cetera. And now we're starting to see this first battle really play out. And I hate to say it to Carlo and the other crypto and clarity people of the world. I think the time has passed on all that, because if this would have been 5 years ago, absolutely Silicon Valley would have been putting their money behind it. They would have been behind it all. But the unfortunate reality is the returns never came from the crypto companies. And then all of Silicon Valley, and when I say Silicon Valley, I mean tech, I mean venture capital. I don't just mean Silicon Valley, the place. I mean tech, venture capital, where these hundreds of billions of dollars are spent and made and et cetera. They're no longer there in crypto. I mean, you're hard pressed to find any type of major crypto fund now. A16 was a big one. All these, there's many of them, and now they are all in on AI, and so they're going to fight for AI. And I think the crypto battle would have been a big one 4 or 5 years ago. I just don't foresee them throwing big money behind that any longer. So that's one story on it. And Carla, I see your hand up. I'm going to let you. I absolutely will want to hear your point on that. But so that's one story here. Another story is, and this ties in directly with it. Stripe is looking at another acquisition. If you will recall, I think it was earlier this week or late last week, we spoke about they're gunning for PayPal. Well, now they're looking at another one, which is Open Router. And what is Open Router? It's basically the Stripe for AI, right? And so they can, when you can utilize it that when you're using one of these chats or whatever, your AI, it can actually route you to whatever's going to be the best and most efficient model for you. So instead of just you're talking to just ChatGPT or you're talking to just Claude or you're talking to just Kimmy, you can essentially have all of them in there and you're just asking your question or looking, to engineer whatever you're doing or writing your code, whatever it may be, uh, and it'll route you to the most efficient one. That could be the best one to handle the task at a high end level. That could be the most cost efficient, several different ways that they break this down. And Open Router is not the only one that does this. But the rumored acquisition cost is somewhere around 10 billion, which would be a fantastic exit for them. Pretty significant up round from their last round, or a pretty significant exit from their last round. So great for them. But I want you to think about what an Open Router does, and then powered with Stripe. And not only Open Router, there's others out there like it. If Anthropic is so expensive, if OpenAI is so expensive, and Chemi or GLM or any of these other, thinking machines, whatever, any of these other ones are 50, 60, 70, 90% less expensive. And your tokens start getting routed to them versus Anthropic or OpenAI because they're these top tier models, the duopoly of top tier models, that's going to hit their revenue big time. And we're starting to see so many of these that are coming out, not just Open Router. So, what does that do to the revenue of Anthropic and OpenAI? I think we can all come to our own conclusions there. And I think we're going to start to see enterprises, maybe they don't just go strictly, we're localizing everything, we're doing everything on prem with Chemi, but maybe they start to use an Open Router or they start to use their own type of I think I saw another one that just got funded, Merge AI or something today. And when you look at those, it makes sense for enterprises to use them. They want to be cost efficient. Enterprise doesn't want to spend more money just because this model claims they're top tier. That's not how it works, especially for these Fortune 500 companies, Fortune 100 companies, et cetera. So that's the second big story. The third one I'll cover, and I really appreciate you all letting me talk about private markets more, because I just truly believe that you know, uh, uh, so many of it, I get messages, DMs from so many of you in the audience every single day that are, oh, I'm starting this company. What do you think? Or do you have any advice or whatever? There's so many people that are now enabled to start companies or build companies or grow companies, these startups, because of AI. And so I think it's really important that we talk about it because it's a finance show, and that's the greatest way to build your finances if you're just starting out. And Y Combinator, which is the best accelerator on the planet, has been for more than a decade, et cetera. Just fantastic. Every year they put out a request for startups, and when you look at these requests for startups, it's almost like a guide to show you, hey, where's the future going? What are people building? Like what is going to get funded here in the future? And just a couple great ones that are in here in their request for fall 2026 request for startups. AI education tutor, the future of American defense, a cloud for small software, multiplayer AI for the aging population, which is one that I love because a portfolio company of mine, Blooming Health, that we invested in, I think a little more than 5 years ago now, has been building AI for the aging population. So I love seeing that. Data for the real world, AI native compliance infrastructure, proving you're human, self-maintaining AIs, et cetera. These are just like ideas. It's not all that's going to get funded. It's not what the future is going to look like, but it's a guide. It shows you like, hey, if you're looking at starting something and you just maybe don't know where you want to go with it, here's some quick startups that we're looking at and that we want to fund. So I think the applications for that are due within like the next week. If anybody in the audience wants to apply to YC and you have an idea, please do so. A few of my founders have gone through it. I've talked with probably hundreds of founders that have gone through it. Happy to help you with that application and just talk you through it. And I think that everybody should. I think those were one more great one is Corgi. I don't know if anybody's been following Corgi, this insurance startup. They just raised their third round in like 8 weeks. The private markets are moving at such an amazing speed here, and I think their latest was a $4 billion valuation. I'm not sure what the numbers are on exactly what they raised, but it was at a $4 billion valuation. It's like the third round in 8 weeks that they've raised, and they're really good with marketing. They hire all the hot Twitter girls and have them out there at these Corgi cafes. And like Justin, you're laughing, but that's literally their strategy. I'm not saying from my personal thing. But
Red
I'm just
Bull
saying that's
reminds me of the Red
yeah,
Bull strategy. By the way, it's Corgi, like the dog.
Corgi, whatever, Corgi. Fuck it. But that's what I'm saying is that they just raised that. So there's just such huge opportunity. I think you have to be foolish if you can invest in startups right now. The way this market's going, we don't know what's going on in public markets. We don't know what's going on with war. We don't know what's going on with all this stuff. I would hate to be in anything that is like a day to day. Like if I was I'd be gray and dead if I was a day trader at this point. But the cool thing about the private markets is I can put money in 6 years, 7 years, 10-year horizon. Who knows what it's going to look like then? But I know it's not making me sweat every single day and worry about everything. So I don't know. I encourage people. That's why I get on the show and I talk to be involved in the private markets, whether that's as an investor or somebody that wants to start a startup. The stuff's not easy. It doesn't happen overnight. Every successful founder I know is 10 years in the making. And but it is exciting, it's fun, it's challenging, and I think it's the greatest wealth creation tool ever created, and it will continue to be. And that's the private markets are only growing. And yeah, that's my 2 cents for the day.
Awesome. Amazing Friday rant. All right, Carlo, I'm gonna let you have first crack at the knock on on crypto that Brandon gave, or the gravestone that he tried to put on it. Go ahead.
You know what? In fairness, Brandon, it's not a knock. You're right. We cannot deny that there's been a tremendous outflow of interest in crypto VC, and it's definitely different than the last cycle where there was tremendous inflow of crypto centric VC, because again, it goes back to the same premise. There's only a finite amount of liquidity out there, and the liquidity goes where the attention is. And there's no denying that AI is taking the oxygen out of everything right now, both on the chip side, processing side, infrastructure side for the centers that need to be built to sustain this. It is the utility that's going to run every aspect of the economy and going to disrupt every aspect of the economy. And there needs to be massive investment in it. If you just look at what a public company like Google is doing as far as how much they are investing of their cap in AI, because firmly I believe they understand that their entire revenue model built on SEO is dying, and that fewer and fewer people are going to Google for answers and they're going to AI, and they need to catch up. So the reason I think crypto will come back is because I think the next leg up for crypto, because crypto and AI, in my thesis, go hand in hand, because it is the economy layer of AI. The reason that I think crypto is sidelined right now with VC interest is because, first, the infrastructure needs to be built on the AI side. And once the AI economy is fully engaged, once the agents are spending in stablecoins that are running on blockchain technology, there will be a capital flow back to crypto because it is the economy layer of AI. And I think they will go hand in glove going forward, because stablecoins are essential to AI payment infrastructure. There's no getting around that. AI agents will not wait for traditional settlement of money. And Clarity Act, which you touched on as well, is a critical component of that because tokenization and 24/7 trading of everything will also be disrupted by AI and will also run on blockchain technology. So I don't take a contrarian view to what you're saying. I just think it is the natural course of the cycle, but I think the capital will flow back. And it's kind of starting to flow back because we're starting to see, obviously, we've overbuilt in certain respects in AI, much like we did in the dot-com era and the fiber optic cable that we laid. And there will be winners. There will be the Yahoos and the Googles, and there will be the pets.coms. It will consolidate. And I think then venture capital inevitably will flow back to crypto, is at least my thesis.
Yeah, so just real quick, I love everything Carlo just said there, and I do agree. I think we're going to be looking at a little bit longer of a time horizon. I DM'd Carlo probably about a month ago, and I told him, I talked with some of my people that work on the Hill, and they told me a month ago that Clarity was dead. And then Carla came out with some great updates since then, and so obviously things have changed. But and I haven't talked to them in probably about a month now, but at least from what I've heard, still that hasn't changed, and I think it's unfortunate. I'm not for that at all. I think Clarity should pass. I think the Genius Act relies on Clarity, and you almost can't have one without the other. But here we are because our politicians are just dysfunctional. Um, and I won't get into the politics of that much, but that's my 2 cents. But one thing I wanted to mention, because I do get DMs all the time about like people that are interested in private markets. How do I get involved? How do I invest? Whatever. One of my great friends, and this is just a plug for him. I don't get paid for any of this stuff. But one of my great friends I've known for years now in the private markets is a listener, Chris, and Chris runs this thing called Lofty Angels, and they basically teach people how to angel invest. They do and they don't charge you to teach you how to angel invest or anything like that. Like a lot of this is just for the love of the game. And he's based in Chicago. So if anybody's like in or around Chicago, I think it's around August 12th. I'll have to double check with him. They're actually putting on an investor summit that I think everybody should try to get to. There's amazing investors there. There's people there. And they do charge for tickets, but he just said for the Finance Daily Show people, he's going to give a discount for people to go. You're going to have some of the top investors in the world there, not just in Chicago, not just in the U.S., but in the world there, speaking about how to invest in private markets or great startups they're looking at. And when you go to these things, it just gives you a glimpse into the future. So, Chris, I appreciate it. You've been a great friend of mine, a great friend of the show for years. And when I say great friend of mine, like a personal friend. And so he actually just said, he just shot me a damn DM. Hold on. That he's
I
going
popped him up
to,
on
if
stage if he wants to, say.
yeah, if he wants to talk about it, go ahead, Chris, real quick,
Obviously,
please.
it's a
Thank
Yeah,
you,
financial
really
space,
Justin.
but
quick.
I figured he should be up here.
You're so kind. First of all, Justin was actually at this last year, which was our first one. It was in startup speak, we call it an MVP. It was our minimal viable product, and it was great. But this year, it's going to be a lot bigger. The whole purpose of this, I actually lose money on this summit. The whole purpose of it is to just introduce more people to angel investing. I've been doing it for 30 years, and when Brendan just said you should be getting into private markets. That's literally the point of this. We're trying to help people that are angel investors today or VCs, but really more importantly, people that want to learn it. And we have a big emphasis on founders turn angels because I've invested in over 100 founders. There should be 180 founders, but 100 startups. So if anybody's interested, I'm going to throw it in the text chat. I didn't want to turn this into an infomercial. I was just saying people want to learn. The big speakers, just so people know, like if you know the company StockX, the founder of StockX is a friend of mine and an investor in several of his companies. He's doing a keynote. Reid Hoffman, who's the founder of LinkedIn, his business partner and co-author on Blitzscaling and Blitzscaling Ventures, Chris Ye, he's going to be here from Silicon Valley. Tom Sosnoff, who is the founder of Tasty Trade and Thinkorswim. I'm doing a fireside chat with him. It'll be like 30 speakers. So if you're in the area or if you want to fly in for it, you're welcome to. I'll drop down. I don't want to take up more time, but I'll throw in the text chat in here the 20%. It's Lofty Brandon for the 20% coupon is my thanks to Brandon. And you can just go to Lofty Angels, LOFTY angels.com if you're curious. That's it. Thanks, guys. Did not mean to be an infomercial. Brandon just teed it up when he said, like, get into private markets. That's what we're trying to help. Thanks, guys.
Thanks, Chris. And again, not getting paid for any of this, so just so anybody
No,
knows.
he's not. Nobody's getting paid. I'm losing money on it. It's like, as Brendan would say, for the love of the game, we're just trying to help more people learn, like literally. It's very cheap. They're $250 tickets just to make it $200 for a full day. So
Hey, okay. First of all, for people that for people that thought that Chris just hijacked the show along with Brandon, no. Chris is a very good friend of a lot of members on this show. An excellent, excellent guy. Super invested and supportive, certainly of the Midwest VC community, but all around sharp guy. So happy to have him up. He doesn't like to speak all that often, but certainly, Chris, thanks for joining and giving the plug. And Brandon, thank you for generally talking about VC investing. By the way, with regard to YC, I do want to make people aware, at least as far as I know, we have at least one, right? If there are any other YC folks that attend our show normally, please let us know. But Dennis, who came out to visit me over here on the Jersey Shore, a couple weeks ago on July 4th. He is a YC alum and he's trying to YC himself a second time. He's trying to get into another cohort. So all the luck to him, A and B. Any more YC folks that want to go ahead and make themselves known to our audience, please do. I'm sure that Dennis would be happy to chat with people also about his experience and the knowledge that he has from being a YC cohort member. Um, Let me and Carlo, thank you for the response on the stable coins. I think stable coins. Um, I really hope that this doesn't end up being a partisan issue. And, I expect Elizabeth Warren to vote against it regardless. But, someone like Cory Booker should be voting for it. I hope he and the rest of his folks don't end up being an impediment to stablecoin legislation getting done. The full court press is absolutely clear right now in Washington. The House goes on recess today. The Senate still has a couple weeks left before they go on recess, and that's what we're holding out for when it comes to clarity. And to restate the point, stable coins are boring, but they're going to make small payments, micropayments, if you want to call them that, and certainly larger payments. In the AI economy, so much faster, cheaper, secure. And I think a lot of VC money has already been plowed into the stablecoin ecosystem. I think the realization of stablecoin activity, with legislation coming first, will allow a lot of those VCs to realize on their gains in these investments, A, B, get reinvigorated around crypto assets generally, digital assets generally. AI is not being held up by crypto legislation by any stretch, but could it be, put on turbocharge? Certainly the transactional side of it can. And so that's why I think it would be good. With respect to Elizabeth Warren's, objections, it, it's hypocrisy that she is fighting now for traditional banks, whereas in previous iterations of herself, she wanted to take down those banks and she didn't like that they had all the power and she wanted to impose all sorts of regulations on them in terms of, capital holdings and leverage and so forth. So it's the flavor of the day. It's the money that pushes the policy and unfortunately, that's where we're at. Hopefully, things change a little bit. Let me get back a little bit uh, to the news of the day and some earnings. Um, let me see here. Dwayne, good morning. We had a gold transaction announced the other day. Let me get Nova Gold and Donlin Gold. Any commentary on that? I know Nova Gold has already owned 60% of Donlin, but now they're buying the other 40%, and it's really just another transaction in a long line of transactions and consolidation in metals and mining over the course of the year. Good morning, Dwayne.
Hey, good morning, David. Can everyone hear me?
Just
Hello?
fine. Just fine. Yep.
Oh, oh, okay, perfect. I was kind of jumping in and out of here. Yeah. Good morning, everyone. Good to be back. So, yes. So the Nova Gold merger here is basically indicative of what we've been seeing, within, gold equities over the past couple of years now. So this deal's worth about $4 billion. So Nova Gold's going to own about 65% of the new entity. And we've talked about this, quite frequently on this particular space over the last couple of years. And this is just an effect of, if you want to look at mining like a clock, whatever tool you want to use the Lassonde curve, you want to use the mining clock. We're still within that stage where, as the price rises, we're going to see some more mergers occur here. So we'll often see the larger companies pick up the smaller companies. Now, despite the fact that we're seeing, and I'll just give you guys some commentary about gold. Despite the fact that we're seeing a downturn in the gold price overall, we've seen a little bit of a uptick in the price, recently, and we've looked at say $4,500 per ounce on average for the entire year here. So a lot of companies are able to basically take the new price here, and that's really helping them. So if you look at some of the contrasts here, we see Barrick, Newmont, and some other of the big companies. They have actually decreased their output, but despite the fact they've decreased their output, they're still making some great revenue, some great profits because of that uptick in the gold price. By contrast, we can look at some other metals like copper, for example. The copper price has actually done the opposite. The copper price has been very strong recently. We had peaks of about $6.50 per metric ton. Pardon me, per pound, over the last couple of weeks here, and now we're settling around $6.32, per pound today. The last time I checked, which was probably about half an hour ago. So with copper, we're seeing some of the same sort of larger companies like Freeport-McMoRan and others. Their production has actually decreased, and a lot of that has to do with environmental conditions. If you want to get a good barometer, often for the copper price, we can look at Grasberg and some of the mining operations of Freeport, which many people consider to be the barometer or the temperature for the copper price or a proxy for the copper price. So in terms of prices, in terms of like average realized prices, we're seeing a great uptick with that as well. So the average realized price for most copper producers right now is around $6, and that's tremendous compared to around $4.30 last year. So those prices are helping copper producers perform very well. And despite the fact that copper hasn't been insulated from what's been happening in the Middle East, of course, we have the constraints in terms of the supply of sulfuric acid, which goes into copper concentrates. We're still seeing copper producers do very well. And, as we proceed through the years here, we're going to see a higher copper price because we need an incentive to get this stuff off of the ground. And if you guys recall, we've been talking about copper since it was around $3.30 per pound. So it's excellent to see where prices are today. So we can look at some of the commodities overall, despite the fact that they're not insulated from a lot of the uncertainty out there, they can still manage to bring in some great profits for producers and also bring in some great profits for you, the investor, depending on how you want to invest, whether that's through an ETF or whether that's through the respective equities of your choice. Back to you guys.
Super. Thank you for joining today, Dwayne. We've missed you, and certainly happy to have your input on metals and resources. Any thoughts on price of oil, where we go, where the breaking point is, what number do we hit on a barrel price, and then the market just goes, straight down? Is there any such catalyst, in the offing, in your opinion?
Oh, well, I'm not an expert on oil. I mean, I leave most of the oil commentary to Honest, of course. However, when we look at oil prices, this is really just indicative of the conflicts in the Middle East and the geopolitical uncertainty. So, we're really going on the, on the comments there. Some of the things to think about are the uptick in attacks by the Houthis in the Red Sea. And there's other, basically the way that I've been looking at this is that there are other supply choke points that we may have to consider moving forward, because we have these two conflicting sides who are well aware of the difficulties coming up, whether that's from the SPR or the upcoming midterms for the U.S. So both of these sides are aware of that, and we're going to see basically continuing conflict. So some areas to look at here, of course, are the Red Sea. We're also looking at Saudi shipments that are coming out from the Suez Canal into Africa. So those are just some of the areas that we have to think about. We even have to think about some of the shipment routes within the Black Sea. So unfortunately, as this conflict continues, we're getting the other major shipment areas in the world feeling some of those effects as well. And as we continue, there's going to be more supply pressures, which may affect the price moving forward.
Great stuff. Thank you, Dwayne. Justin, good morning. Anything to say on Tesla's price action yesterday, or reflecting at all on, our comments on the show, and then some thoughts that you may have had during the day?
Sorry, I'm assuming that's for me because I got in. Yeah, the X it crashed on me
Oh,
twice, so apologies for that. Um,
that,
yeah, I just didn't want to. Oh, if that was for
no,
someone else, I didn't want
that's
to
for you, my
overstep my.
friend.
Okay, all right. Um, I don't think I don't think the performance is yesterday's that surprising based on the discussion we had. Like Nikovsky represents kind of the non-fan institutional investor. I wish he was here. But I think his comments were basically like, yeah, okay, great, lots of claims, lots of maybes, lots of future, nothing real, and he's right. And the reason I'm invested is because of what I see in the future. And I will say, even though I'm heavily invested in SpaceX and Tesla, um, yeah, timelines aren't real with Musk. I think my belief is the timeline's never going to be accurate, but he's definitely going to get there. So I keep money in there because this and history has proven it correct. Like they'll just break some crazy announcement and do something, and then the stock doubles. So that's why I'm invested. But yeah, it's not surprising. Like the call was 50% growth on FSD. Okay, that's cool, I guess. Um, their cash on hand, I think they're investing a bunch into upgrades right now, so nothing really to report there. Optimus should be cool, but we have yet to see that. Robo taxis rolling out, but we don't. As he pointed out, I think he said there were. I didn't actually know this number. I thought it was. I thought it was lower actually, but he said there was 20 or so, 50 or so cars or something on the road. So yeah, nothing present is incredible. It's the company's incredible, but from a growth standpoint, if you're looking at the hard data, yeah, there's a lot of questions around growth. But like I've said before, as a retail dumb investor, the only way I can't, I don't have sophisticated tools to beat people in timing. I can't get in early on stuff. So my only tool I have is look at the founder, look at the future, and make a pretty good assessment based on where I think that future trajectory will be. So yeah, based on the call, is there anything mind blowing that's going to double or triple the stock? No, of course not. It's not amazing. So we saw that sync. The sync yesterday was a bit more than I expected, but it's not super surprising.
I hear you. And not to just pander, but I think that it is a unique company with a unique leader. The goals um, for those that are bears, seem out of reach, but also um, inconsequential to the stock price today. And I think it was reported Michael Burry, has made a tidy profit on his Tesla short over the past bunch of weeks. And sure, the stock is going to ebb and flow potentially largely, or in a large way, excuse me, until such time as the company does very much actualize its second act. And we haven't seen the second act out of the company yet, or the next act out of the company in terms of driverless A and B, the revenue model coming out of robo taxis. By the way, over Pat, go ahead.
Well, I was just gonna say there's a one, like Tesla as a company. Are they, as a car company making electric cars? Is there a ton of stuff on the future horizon outside of robotaxi? But I understand investors may be concerned about. Probably, it's no, it's going to be a great company. Blah blah blah. The Optimus stuff, that's going to be incredible. But here's like the mystery box, or the thing I don't know and I don't understand, that confuses the heck out of me. Yesterday, I summoned my car up to the front door to pick me up, and someone, like, looked like a tech person, got in their Range Rover, and they just said, "Hold up." I think their words were like, "Bro, did your car just pull up for you?" And I was like, "Yeah, Teslas do that." And he's like, "What?" That's a thing. Like, I'm amazed at how many people don't know the capability of the car yet. We've talked about this before, and that's the gray. That's the area where I'm like, how do people not know this stuff? Like, I'm clearly missing something huge, and this is an area where we've talked about this before as well. That Tesla may be one of the most innovative companies in the world, but they're one of the, again, I'm an investor here. They're one of the crappiest communication companies in the world. Like, their comms and marketing, or lack thereof, is just abysmal. And I think this is a really good demonstration why they can't ignore comms and marketing. They think the absolute amazing technological breakthroughs they have made are good enough, and they're just not. You have to meet people where they're at. You have to form not necessarily a marketing plan, but just a overall. And their lack of interest and their lack of ability to do this, I really think, is absolutely crushing them.
So I'm going to give you 2 cents on that. Okay. And I'm not a marketing professional. I think with most things, in most of the businesses that I've been involved in my lifetime, it's about giving somebody the experience uh, for free if you have to. And then they will become hooked. And your point about, I don't own a Tesla. I have one friend in whose Tesla I have sat when there has been, automatic, driverless driving going on. And that was the only time that I've been in it. And so how do I'm telling you, Justin, you're in the minority. Not saying I'm the majority in terms of my lack of experience, but even Dave Nikoski told you yesterday he's never experienced it. I couldn't be invested. I disagree. I'm a Warren Buffett kind of guy. I can't invest in something unless I use it, unless I feel it, unless I'm a customer. I understand the moral hazard of falling in love with something and not understanding that I may be a very unique person and the rest of the market is not like me. I got that moral hazard. All right. I drink cherry Coke like Warren Buffett. Maybe not everybody has the palate for cherry Coke. No problem. I got that. And I think he's got that too. But to invest in a company and have no experience with the company at all, that's not something that I can do. And so
Absolutely.
I
And this
agree
is
with you.
marketing is experience. That is marketing's job, is to make sure more people experience it. And that is where the failure is happening. I know that, like, when you test drive or go look at one, they are. I know that their staff, their frontline staff, are required to have you try FSD, full self driving, the robot driving. But that, it's just not sticking. Like you said, no one, like it. I agree. I am in the shocking minority of people that have experienced that, and that is a major, major marketing failure.
but it is a very intensive um, freebie to give away, right? In other words, your point about getting anybody who is, comes to test drive, but how about all the people that don't test drive? And I do think that he will, he has no choice, he being Elon Musk, he has no choice but to figure out a way to get robo taxis up and running. I think once people have robo taxis,
Absolutely.
it's
Oh,
just it'll be a cascade after that. That's my feeling. And yes, it's taken too long. And yes, they could have done this better. And yes, there has been a lot of divergences along the way. Like if they were never going to be a luxury car company, like yeah, the S was a good start because it got a lot of people into the automobile. But the people that bought the S are certainly not the people that are buying the Model 3. I mean, maybe they're buying it for their kids, but it's two totally different demographics. So there has been a lot of, I don't know, strays away from the mission. But I certainly believe that they will get there. The question is really whether the time that they've taken is to their detriment so that others have been able to catch up in a way that they shouldn't have been able to catch up, a la Waymo, has now, caught up and, gone past them. Granted, Waymo is not in the same business in total, but it's not so hard for Waymo to become like a Tesla, at least when it comes to automobiles. But I will stop there. Carlo,
I
I
mean,
saw your hand up.
I'd argue Tesla never touched Waymo yet, as far as self-driving. Waymo's been the leader for a while, and Tesla's definitely the underdog in like cabs, right? You know that category. They're definitely the underdog. They're not the underdog in self-driving, but yeah, they let's not. And this is still Tesla's fault, but let's also not forget the regulatory burdens they're facing everywhere they try to go as well. They see pushback from a regulatory standpoint. I talked about the laws in my own home state of Iowa that people writing these laws, again, nice people, I've spoken to them, but they're writing these laws. They're not passed. They fell out. They didn't even make it through subcommittee, but they're writing a ton of laws to try to keep autonomous driving out of the state of Iowa. And when I asked a bunch of these people, why are you doing this? The answer basically boiled down to, well, we've never experienced it and don't know about it. Therefore, we probably shouldn't have it. It's probably not safe. I mean, that's kind of where it. So there's that layer too. But you're right. They're just they keep taking their eye. It does seem like they keep taking their eyes off the ball so many times.
Carlo, your hand.
Mr. Tawal, you have some homework before next week. You should schedule, and it's so easy to do, schedule an opportunity to test drive it and experience it for yourself, because we can
Good
talk
call.
about it, we can describe it, but I would love to see your firsthand impressions of it. And I think you will be absolutely blown away.
I'm sure I will. I really like the car that I currently
It's
drive.
financial research at this point, David. You have to do it just
Uh,
to be a better
all right, fine.
space captain.
I commit to doing it. I'll do it. As we've been talking, by the way, markets have, I don't know, held, let's say. Crypto markets, though, are quite weak. And I think that has to do with folks definitely saying that clarity is not going to get done before the break. And there is really only going to be a very slight window in September when the Congress comes back from vacation to try to pass clarity. We'll see if what the floor is on crypto today, and whether there are any other headlines in the space that are able to save it from Clarity Act seeming to be in real jeopardy at this point. Folks, I'm going to go ahead and leave it here for today, for the weekend. Next week will be a big week of earnings. Oh, I did want to say I didn't cover airlines earnings that came out during the course of the week. American Airlines, the largest, went ahead and slashed its full year guidance and Q3 forecasts because of fuel costs. And I think everything going on in Iran over the last couple days, bunch of days now, is not going to make life much easier for the airlines. There was a bit of respite. There was a rally, but I think they're going to remain under pressure because of what is going on and the undetermined outcome at this point. We will cover a lot more in terms of earnings next week. There will be the guts of it. We will also cover the Fed, Kevin Warsh speaking. So please make sure, if you can, if you're not on vacation, if you are on vacation, enjoy that summer vacation. If not, join us here every morning, 8 a.m. We will be here with the latest and greatest. I wish you all a great weekend and a good day in markets. See you on Monday.